Hello Forex Lens. For this video we are going to go over a different type of chart that is not very well known, or if you have heard of it you don't know how it works. We're going to talk about Renko charts. Now Renko charts are different than regular Japanese candlestick charts because they do not use time. Alright, they are strictly price, and Renko charts come in bricks. Alright, so if you're using TradingView and you have Renko, here's Renko, and what we want to do, the default setting for this is they put it on ATR. And so ATR is going to tell you that, like over the past hour, past 14 periods of an hour chart, so over the past 14 hours, the average movement in this pair, a GBP, JPY, this is a JPY or yen pair, is about 41 or 42 pips. So what I really want to do is I want to bring this down. I want to go to traditional, and I'm going to make it, we'll make it like 25 pips. And I have on my screen here these two boxes with the letters here. So a non-JPY pair, like anything without the yen, is going to have that 0.001 equals 10 pips. And then for any yen pair, 0.1 is going to equal 10 pips. And that's the setting you would use in your Renko charts when you bring that up. If you want to show only 10 pips, you would put 0.1 in here for this pair. Now, Renko charts, I love Renko charts. I trade them a lot. I use them quite a bit in my own trading. And what I really like about them is that they are clean. They filter out a lot of the noise. And again, there is no time involved for these bricks to form. All right, it could take, it could take 8 hours to form a brick, or it could take 5 minutes to form a brick if price action is fast. The point is that Renko bricks only form when they have filled the set price, or the set pips. So I have 25 right here. If I zoom in to here and I take the price range tool, you'll see that there, not exact, can't get it exact, but it is 25 pips. This red Renko brick means it's moved down 25 pips. So every single brick on the way up here means it moved 25 pips. And every single red brick is 25 pips. Now, the strategy, or the way you look at this, is if you have a long trend and you see the change of color, if it goes from green to red, that's where you kind of want to look to see why that's happening. The strategy a lot of times is to change your bias after that changes 25 pips. You can also use other indicators to help you with that decision. And the only suggestion I would give to you about using any kind of indicator is that you really only want to judge from extreme ranges of overbought and oversold. Anything in the purple area, in this chop box here, just really kind of ignore it. The best trades you're going to find are going to be when you have divergences in the very, very upper ranges of the RSI, or the very, very lower ranges of the RSI. Another thing to look for is wicks. Now, wicks are powerful indicators that price has the highest probability of reversing, especially if it's a reverse brick. We have 25, 50, 75, 100, 125, 150 pips up here. Now, you have to think about this in how these bricks form. So price closed up here at 151.0. All right, that means if price got up there, then it has to travel 25 pips and then a further 25, all right? So that means 50 pips down to form this Renko brick right here. But the wick tells us that price actually was trading up. It didn't quite fill another up brick. It got rejected and price went down. And when you see something like that, that is 72 pips. 72 pips of movement before this was formed. Now, that is a very, very bearish sign. You can look for some confirmation on other indicators. That's a very bearish sign. When you see wicks, you can have a very good, you can feel pretty comfortable to trade in the direction that the color of the Renko is telling you. And you see this a lot. You know, this is a choppy region here. That is not ideal trading. And you're not always going to have a wick, but definitely if you are using some type of indicator, you know, make sure that you have some other things, tools that you can use to confirm the change. Now, I've showed this kind of stuff to folks before, and it looks really easy just to, you know, switch and say go long or short depending when it changes. That can be risky. I mean, depending what your loss tolerance is, depending on what your risk tolerance is, you know, psychologically and account wise, you know, if you're okay, you know, setting a stop, you know, 100 pips, then fine. That would probably work out. You know, you'd have some losing trades, but you know, for the most part, you would be ahead. The other great thing about this is finding actual clean areas of support and resistance. I don't know if you'll hear it on this video or a different video, but drawing really kind of, you know, subjective areas of support and resistance on candlestick charts is not something I like to do. I wouldn't even recommend it. You need something else to base those zones on, because there's so much noise on those charts. That, you know, there's so many wicks, there's so many bottoms of full bodies. It's difficult to gauge where you should draw those. Renko really makes this a lot easier. You can find all sorts of great zones of support and resistance and trade off them. Excuse me. I got back from the gym. I'm a little winded. So you would plot those here, and then you can also do your trend lines if you're wanting to follow like a trend of price movement. You can put those there, and then what you can do. Well, actually, let's just take a look at this here. This is what a Renko chart looks like compared to, let's see, this is the 9/8 of 17. So if I put that there and this here, clear this up. (9/8 of 17). Well, I can't even fit all of it on the screen, but you know, if you look at these two screens, so from where my cursor is on the right monitor, or the right window, that price action is exactly what's on the left side. All of that noisy chart on the right is what's happening in our Renko chart on the left. And I don't know. To me, I would rather look for areas of support and resistance, or kind of an idea of a trend off of the Renko chart, and then put in my trades and entries on a candlestick chart. This is so much clearer to me. I'm not a genius, so I like to have things simple as possible, and Renko is simple as possible. It probably sounds confusing because it's new and a lot of people have never used it, but we can then, if we've done that, then we can actually drop this out of Renko and bring it back to a candlestick chart. and you can see where our levels are at. Are they dead on? No, and they shouldn't be. But you can see, well, I mean, this is all past price action we've built these on. We would need more time to see what happens, but it is 12:45 in the afternoon my time, which is Central Time, on the 4th of December, and price is being rejected at these Renko support and resistance levels, and price is just kind of hanging around here. I don't know, it may find support. It's not really oversold. It's neutral in the RSI and the composite momentum index. This might shoot up. It'll be interesting to see what this is at if you're listening to this video in the future. Check back to see what this is doing. It'll be kind of neat to see how price responds to these drawn levels here. So, again, those are Renko charts. I love them. I find them extremely useful, and when you're using them, use them as a tool to use if you're a Japanese candlestick price action trader. Renko is really going to help you find a good bias and entry zone, and I think you'll find it of benefit. So thank you very much for listening, and I hope that information helps you out. Bye-bye.